Hello and welcome to the Blockchain and Us, where pioneers and thought leaders talk about their journey in blockchain technology, crypto assets, and the token economy. And I'm your host, Manuel Staggers. If you enjoy this podcast, please give it a top rating and review on iTunes, and feel free to follow me on Twitter at Manuel Staggers. This episode is brought to you by Crypto Storage. Crypto Storage offers a proprietary solution to enable professional storage of crypto assets. The storage is secure both physically and digitally on the highest grade hardware security modules with detailed configuration possibilities for individual-based access control. To learn more, visit www.cryptostorage.ch. And my guest today is Adriano B. Lucatelli, who the Swiss business magazine Bilanz chose among the top 100 Swiss bankers in 2017. Adriano is an outspoken critic of Bitcoin and other cryptocurrencies, and he is a co-founder and CEO of Descartes Finance, a Swiss Robo Advisor. He started his career in 1994 at Credit Suisse, where he held various managerial positions in Zurich and London, and from 2002 to 2009, he was managing director and member of the management committee at UBS Switzerland in Lugano and Zurich. From 2012 to 2018, Adriano lectured at the University of Zurich on the political economy of international finance. And now, to the interview. Hello, Adriano, and thanks a lot for taking time today.
Hi, it's a pleasure to be with you.
Adriano, we met about 2 years ago when I made an interview series on fintech. And back then, you had just started a Robo Advisory. So what's the progress with that project?
I'm actually quite happy with the progress we made so far. The B2C part has disappointed to some extent because the Swiss are not so easily convinced to switch from a traditional bank to a fintech company. But our platform has proven to be quite successful for the B2B sales channel, i.e. for corporates, and I see tremendous development there. We've signed first bank, so I'm quite happy. Thank you.
Mm-hmm. Cool. And that robo-advisory is traditional assets, it's not crypto assets?
It's absolutely traditional, old style. We invest in assets that actually produce something.
And speaking of that, also in a recent talk, you spoke about the value of Bitcoin going to zero. That's your opinion. So can you explain that a little bit?
Yes, it goes back to a quote that I've seen by Voltaire. He alluded to fiat money, to paper money, and said that paper money will eventually go down to zero, i.e. the real value of paper has no intrinsic value, and I applied that to cryptocurrencies, in particular to Bitcoin, and which did not make me a lot of friends, but I thought it captures the sense of Bitcoins. Today I see basically three functions of Bitcoin, and for at least two I don't see any value. For example, if you consider it as an asset like a share, a real asset, then you would have to apply, for example, discounted cash flow methods to Bitcoin, and that will eventually lead to zero. If you look at it as a...
Sorry to interrupt. How exactly will that math work, that it goes down to zero?
Because it has no intrinsic value. You cannot really value what Bitcoin is. It's not an apartment that pays you a rent. It's not a share that pays you a dividend. It's not a bond that pays you income, coupons regularly. It is basically nothing. It's a Bitcoin, but what does it represent? If you look at it as an asset, then it does not have any value because all the traditional methods, valuation methods, do not apply. So the ultimate conclusion then is it's worth nothing. If you look at it as a commodity, like gold, then I would argue the same. It has no value. Gold, at least you can use industrially, and about 10% goes into industry, airspace, airline, medicine, medical items. But Bitcoin cannot be used in medicine, cannot be used in airlines for what for. You cannot even eat it. So in the end, it's the comparison to gold, what people like to do. Usually you see Bitcoin as a gold coin. And ironically, they say we mine Bitcoins like gold, but this is fake. This is not true. So the metaphor is actually misleading. So if you then argue, well, it's not a commodity, it's not an asset, so what is it? Well, you can argue it's a currency. That's what people say. So you buy and sell, and it's supply demand, like Swiss francs against dollars. And then I see some point there. I still don't think currencies per se as such do have value. If you look at it as a currency, at least you can argue, well, it's worth what people are ready to pay or willing to pay. Does that mean it has value? No, but at least you can justify a certain price. It's the equilibrium at a certain time between supply and demand. So at the end, looking at all three possibilities, what it is, this animal which nobody really understands, and probably will take some more years to fully understand what it is. Maybe we come to the conclusion it is nothing, then fine, it will collapse and go down to zero. Maybe we'll find a new way to look at Bitcoin. Maybe we see a reason for it. Maybe we don't even see it yet. That's fine, it's an experiment. But what I don't like is that we hype it and we argue it's something new, not seen here, everything that has been true in the past is not true anymore, and all that stuff. I really dislike that tremendously. We should look at it as something new, but not throw your mind out of the window and just follow a certain hype. That's my take out of the Bitcoin hype story.
Good. So just to recap, you said it's not an asset, it's not a commodity, and it's not a currency.
Maybe it's a currency, but I don't see it as having some value, because the Swiss franc as such doesn't have value. The exchange rate against the dollar just says you can get a certain amount of pesos against the dollar or euros against the Swiss franc, but that does not imply it has any value, and that's the same. The same is true for Bitcoin. You can argue, well, there's a guy or someone willing to pay $9,000 for a Bitcoin, but does it really have the value of 9,000? Probably not. And then people argue, oh, well, that's true for gold as well. But then I say, not really, because if it becomes too expensive to dig out gold, people will stop. So there's a natural worth or natural price tag to an ounce of gold, which is probably the cost to dig it out and put some margin on it. And if it gets too expensive, then people will replace gold in the industry for something else, or they will not buy gold watches. They might buy steel watches. So there is a natural price tag which makes sense, which people can deduct. But Bitcoin, why is it 9? Why is it 10? Why is it 0? Nobody really knows it. People hold it, and there I agree with Warren Buffett. People actually just hold it in the hope that they can sell it to a dumber guy later at a higher price. And that's not a very promising story. So I'm a bit critical about Bitcoin and certain cryptocurrencies.
Mm-hmm. But I mean, the way I understand it, you have
the cost of something and you have the price, right? Of course, with gold, I understand it's the cost of digging it up and the cost of melting it down into a bar and all that. But that's still not the price. No. The price is what people are willing to pay above and beyond that cost, right? So, I mean, wouldn't it just be normal supply and demand economics with these cryptocurrencies?
It is supply and demand, but that does not mean it has value. It's just take baseball cards. Do they have the value they go for? Probably not. So art. Is a Picasso worth 200 million? Maybe not. Maybe it's not even worth $1,000, but that's the value we give to a painting by Picasso. But there you have a painting. There you have this history. There you have limited. You have one painting, and if it's gone forever. So I dislike the idea of comparing Bitcoin to an art painting or to gold. I think it's simply a code that is worth nothing.
Some people I speak with, they talk about digital scarcity, which for the first time introduced scarcity into digital goods. So, I mean, what about that argument?
Yeah, that makes sense. But then again, going back to value, you know what struck me is when in February this year, 2018, when the markets crashed, I would have expected people moving into scarce supply assets or limited supply assets like gold and Bitcoin as such. But guess what? What has happened? Nothing. It actually collapsed as well. So the argument that it's a store of value protecting you from a crash, from inflation is not true. There is no negative correlation between traditional assets like shares, equities, and Bitcoin. Something that has been true in the past between gold, not perfectly, but people would rush into gold if you have some political crisis somewhere, or if the markets get shaky. But that has not been true. So the argument that scarcity has done something special to Bitcoin or to cryptocurrencies or crypto assets in general, however you want to call it, define it, has not been true, because scarcity has not been a factor in price building so far. You would have had to see it. And the interesting thing is that what is interesting is that the former finance minister of Greece, Varoufakis, saw that too, and that made him conclude that Bitcoin is in a bubble, because he said if it weren't true, then you would have seen that negative correlation between fiat money or real assets and assets that have scarce or limited supply. So, going back to traditional, boring, normal economics 101, there is no real reason for Bitcoin. Maybe another asset, but then it's just something that you digitize. You take this glass, which is pretty real, you digitize, but then you have a collateral behind it. You have a derivative. You say, okay, this Bitcoin 010, whatever the code is, embodies or reflects the value of a glass. That's fine, but it's still the value of a glass. So I think if you use a coin to represent a real asset, car, house, chairs, whatever, you name it, computers, then it makes sense. Then you allow something to become, to scale. You can actually scale certain things, and you can move it across long distances, because Before you can buy a house, you have to come here, you have to go to the notary, you have to look at the house, blah, 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 blah. Blockchain, or the currency or the token that represents a certain part of the house, can travel easily around the globe. There I see some efficiencies, but it's always a real asset behind something, not the token as such. The token as such is worthless. Like a paper. The first use of tokens have been vouchers that you would use to travel to, when you travel around the globe, and you hand in your voucher and you get the room in a hotel. That's exactly what Bitcoin is. But nobody would ever value the voucher as such at 9,000. They would think you are crazy. They would send you to the sink. But the fact that it values a room to use for 2 or 3 nights, that's the value. The value that you write on the voucher, that's the value. The voucher, the paper as such, is value not even 1 cent. And that's the analogy to Bitcoin. Bitcoin as such is worth nothing. It gets its value by what you give it to it, like a house, car, whatever. That's what it is. And there I see tremendous potential for the financial services industry.
Let's go back to that very quickly. I mean, let's say I have a dollar bill. The dollar bill is also just printed on paper, so you could argue the dollar bill is worth nothing.
Yeah.
That doesn't mean the US dollar is worth nothing.
Is worth nothing because we agreed that it's worth 10 whatever francs, dollars.
Well, the currency markets agree because they trade.
Yeah, but they trade certain values that we give to that paper. The paper, I agree. The dollar bill, the Swiss franc bill, is worth nothing. It's about 10. What is it? The latest 10 franc bill costs 30 Rappen, 30 cents. So that's the value. 30 cents, but we, by law, agreed it's 10 francs. If we, by law, agree that's worth nothing, then probably someone will pay 30 cents. Or more because it's an old dollar bill, which you will put on a wall. So it's a collectible. But that's the difference. But nobody has given a certain value by law to Bitcoin. If the US decided 1 Bitcoin by law is 10 francs, $10, fine, then it's $10.
Well, but let's say the central bank of the United States also hasn't given an equivalent value in gold to the US dollar.
No, it doesn't. It's just by law. Law says this paper is 10 francs. It's only law. It's a value that by law has been given. I know it's difficult to understand because there's no real value, but that doesn't mean. I think fiat money and Bitcoin share a lot in common. It's not them against fiat. Actually, they are the same. They're worth actually nothing. But if Bitcoin could get a value like what you've seen. Recently I've been to Cuba. You have the traditional national pesos and you have the cook, the strong peso, basically linked to foreign currencies. So why the difference? It's the same. It's pesos, the same country. The difference is because the cook is linked to a strong value which you can use and then buy some stuff. The national peso of Cuba is worth nothing. Why? Because you can't buy anything. And that's the same with Bitcoin or currencies. If you attach a certain value, i.e. it's linked to the dollar, then it gets basically the value of the dollar. Then it gets value. Not the paper, not the bill, the value by law. And the same is true with a house. If you digitize the house and you issue 100 tokens, house tokens, then it's not the token that has value. It's 1/100th of the house. And that's what, and then the token in value should fluctuate with the value of the house. Like the cook fluctuates with the value of the US dollar. And that's what people should understand. I've noticed that a lot of people have difficulties to understand monetary economics because they say, yeah, the US dollar is worth nothing, so shit, so the Bitcoin is the holy grail to stability. No, it's not. It's the same.
Well, I think if everybody agrees that the US dollar is worth less than it currently is, and let's say I want to exchange it to euros or Swiss francs, then of course the value would also go down.
Yes.
But isn't the same true for Bitcoin still? I mean, Bitcoin is really a price that's made in the market.
Yeah, I understand what you say, but that doesn't mean it's a price, it's not value. And
but so is fiat money.
Yeah, I'm not disagreeing. I'm on the same page. That's what I say. Everything that has no intrinsic value will eventually be zero, as Voltaire said, funnily said, but it's true. Everything that has no intrinsic value will go down to zero eventually. Even highly traded collectibles. You see that if you go to art shows or the trunk shows, then you find service from whatever the ceramic service might be in high demand, and 10 years later you get it for free. They throw it at you. So that's you have to look at it more as a collectible, if probably as it's bad. You yourself give a certain value to something. For some, a Picasso is worth 200 million, for others 2,000 francs. Who is right? No, both are wrong. There is no way to clearly you can price it but not value it. You give your own value. Bitcoin is the same. It's a belief system, but it's not an asset that you can based on a belief system. It's not based on a traditionally or generally agreed way to assess value, and that's what people don't understand. They mix assets, value, price with everything, and in the end they say, but fiat is shit too. Yeah, so fine. That doesn't make Bitcoin better. What's the difference? So I think people should start to get a bit more realistic about these things, and then probably we can get together again and not shout at each other or criticize each other. What, by the way, happened to me because I said something that certain people don't like a sect. But we should sit together, forget all these belief systems, and look for a way to find a generally agreed way to value, or at least assess, to understand what it is. I still think nobody, even me, fully understands yet what Bitcoin can potentially be. As I see it today, I would say it's not a commodity, it's not an asset, it's at best a currency, or even less a collectible. And is it right? I don't know. At least I have a way to look at it. But to say it's better, never tested before, new, everything, all this is past, it doesn't add value, blah, blah, blah. Fine, but that doesn't help us to get further, to better understand what's going on, what is happening right now around us, this big experiment. And every time I hear someone, well, discounted cash flow cannot really apply to it because it's something new that has never been here before, I have to laugh. They're just too young to remember 1999 when .com collapsed or crashed, crisis. happened. So I remember people were saying, well, you cannot, you look at Amazon, it's hardly making any money yet, and all the people think eventually it will produce money, but actually it doesn't. So it's the same with Bitcoin. Financially it doesn't produce anything value enhancing. So we have to find that. And we don't know yet where it is. Blockchain, yes, might be that thing that can help to make it valuable, but I don't see it yet because nobody pays for the internet. People pay for access or for applications based on the internet, but there's no internet share.
Mm-hmm. Yes, I mean, I want to ask one follow-up question about this. Bitcoin will go to zero, and then we'll move on. I mean, I don't want to drill down too deep, but still, I mean, I'm not quite sure the argument is so obvious. I mean, to me, it still isn't, because if you say Bitcoin is a belief system, which I also believe, then the US dollar is also a belief system.
Of course.
But the US dollar has behind it a central bank and a government which reassures people that they will somehow step in and do something if the value threatens to go towards zero, right? In Bitcoin and all other cryptocurrencies, we don't have that. We have no central bank, no authority coming in and saying, oh yeah, you know what, we'll put a safety net underneath it to capture it. And I get all of that, I totally understand it. But still, I think it's a strong statement to make, to say, well, that safety net is missing, therefore the value is zero.
Well, I said, I argue, I wished we had the good. I mean, when I came across Bitcoin the first time, I thought it's a nice thing, you know, because after the financial crisis, we all knew something has to be changed. This system is not stable. It made many people very poor, unemployed. We have never basically recovered from that crash. I think historically we'll probably never make up that loss again eventually, but many years later. So we have at least one or two lost generations. That's for sure. And when I came across Bitcoin for the first time, I thought, oh, that's neat. It's the limited supply. Nobody can devalue, debase it. That's like what the libertarian, like Hayek and Milton Friedman were looking for, to make the system more stable. But in the end, it has to be something valuable, and I don't see that, because as I told you, so far I have not seen that link between stability and crises, because Bitcoin crashed during a crisis when other assets crashed. That should not happen. So people do not really believe what they are saying, because they would storm Bitcoin in a time when the market goes down by 5%. You would expect Bitcoin to explode by 20, 30%. Nothing of the like has happened. So people who think it could be a store of value, of stability, do not act accordingly, which goes to show that people distrust in the end Bitcoin, and they rather have US dollars. By the way, I prefer very much Swiss franc to Bitcoin, and I probably will stick to Swiss francs for a while.
But the example you just gave, right, of the price explosion and then the subsequent crash, isn't that just an expression of a free market? I mean,
yeah, but it shouldn't be like that, such unstable. I think markets need stability.
But these markets are immature, one could argue, and they're very early, and that's why you get these extreme prices. I mean,
of course, I agree.
Right.
But that doesn't make it better. It's a fact. And so, and if it wants to survive, if Bitcoin wants to prove me wrong, then it has to grow up very quickly, because if it doesn't, it will disappear for sure. Because then people say, it was a nice fad. Maybe you remember the swatch collections that famous artists made. They would go for 1,000, 2,000 francs. Now you get it for 20 or 30 francs, and the previous owner is happy that he can sell it at any price. That can easily happen to Bitcoin as well, because these swatches or collections, they were limited as well. And yet, the price basically went down to zero. There is no guarantee that scarcity protects you from zero value. That's my point. Forget about scarcity. Because most of the artists, or artists' works, are worth nothing. They reach the highest price when they are sold for the first time, more than 90%. And that should get people think, say, hey, wait, there's a famous artist. Nobody. Do you know if that Roy Lichtenstein will be worth millions in 100 years? Probably not. Who tells you that of the stars today, music stars, will be remembered? Probably the Beatles. Maybe they're Elvis. Probably the only one of the rock and roll history. Of all the groups, probably the two will be remembered, the Beatles and Elvis. And the same is probably nobody will remember Bitcoin in 20, 50 years. I want to include or add an element of humility and relativity, and not think, because it's new, it's cool, it's scarce, it's anti-establishment, it's anti-whatever, it's cool. No, maybe it's not cool at all. And that's what I wish. I wish that kind of realism came back to the discussion or to the table, that we can get over all that hype and start to look at it afresh and try to see the value that it could have. That's actually missing, and I think it's very sad, because I'm not generally against Bitcoin, because I want to see it at zero. I'm just making an analogy. Something that has no intrinsic value will eventually historically go down to zero. Dollar, Swiss franc, swatch collection, other collectibles eventually will go to zero. Even books written by Fidel Castro in 100 years, nobody will ever read it again. Maybe I'm wrong, but probably most likely I'm right. And that's what's missing. I think realism, humility, relativism should guide the discussion, and not hype, greed, coolness, and all that stuff.
I mean, you've been a lecturer of economics at the University of Zurich. What if you look at price discovery of these crypto assets in terms of Austrian economics?
The good thing about the Austrian economics or the economists has been the focus on credit or monetary policy. They realized that the current system, that a monopoly in money printing, will lead to a debasement of the currency, because the leaders, the elites, do not have any interests to repay their debt. So the easiest way to get rid of your debt is to inflation it away. And that's the biggest criticism or one of the biggest criticisms that the Austrian economists raised. I think another point is that the monopoly in not only printing money but in setting interest rates is never correct. People leave interest rates too low, that will entice people to take out loans and spend it for stupid things. And when interest rates go up, they cannot repay their obligations, their debts, and then you have a crisis. What has happened in the 2008 financial crisis? So if you have a monetary system that is limited or has competition, good money against bad money, that these things will not happen, but probably the extent of a crisis is much smaller. And if you now make the connection to Bitcoin, that was the hope, I think, of the Austrian economists, that Bitcoin could be exactly that solution to that problem of high inflation, too much debt, which the current financial system or monetary system, the problems that we have now. And I have great sympathy for that. Absolutely, because many people, as I said, suffer from these crises, and usually it's always the poorest of the people, and not the rich 10% who suffer more. So I have great sympathy for a system that makes it more stable. But is it gonna be Bitcoin? I simply don't know. It might be. It might be another form of cryptocurrency issued by a government that has limited assets or scarcity. The one problem I see with that is that it has a deflationary effect, and people will not spend it because because it's limited, they expect it to, like land, that the value will go up. Now I use the word value, and then they will not use it. They will not spend it. So the money will not go to the productive, or is not a productive resource anymore, but a store of value in the hope that it will rise. And then it has a tremendous deflationary impact. And then it's not a currency anymore, but an asset or a store of value. And that's another disadvantage. So I'm a bit, I see the point and have great sympathy for the Austrians, but it's not going to be the solution.
Let's take a quick break for a message from our sponsors. Crypto Storage is part of the Crypto Finance Group, providing services for professional financial intermediaries and therefore bridging the gap between traditional markets and blockchain technology. The storage solution offered by Crypto Storage raises market standards by introducing a new security paradigm, which features 2 layers of dedicated and redundant hardware devices. This setup allows for a dedicated, independent, and highly flexible multi-signature framework. All transactions can be independently reviewed and approved on a dedicated tamper-proof hardware. The hardware security module, the tamper-proof signing devices, and the tailored software solution are all developed by leading Swiss providers with vast experience in finance and IT security. To learn more, visit www.cryptostorage.ch.
I see the point and have great sympathy for the Austrians, but it's not going to be the solution.
But isn't that argument that you just made would be an argument for the value increasing?
Yeah, it will increase, but people will not spend it. People will expect that I have a scarce resource, Bitcoin, and you know that it will go up in value because other things are being inflation away the value or reduced in value, like the national pesos and the linked peso, Cuban peso to a US dollar. So that would happen, that people will not use, cooks will not use Bitcoins because they know it will go up in value. When you spend a Bitcoin, it's out, it's gone, you don't have it. Another guy will then keep it. And that's hugely deflationary, And we don't have yet enough experimental experience of what deflation actually means. We had the crisis in the 1930s And there we saw what it means if governments are too tight. And that could be a scare. Well, that's scary to me, and that could happen to Bitcoin as well. I think we should be careful. There are, people are trying to adjust. Well, Bitcoin is limited. Eventually, there will be whatever, 21 million in circulation. Some others are starting to adjust the size according to growth and of the economy. So it's not going to be limited, but it grows like at the speed of the economy. If if global GDP grows by 3%, then you can argue, well, then let's have the currency circulation grow by 3% as well. That could be a solution, but then you have to guess what growth could be, and then you are almost in a communist system that some planners decide what it is and how much it should be. That's another scary thing. What used to be a libertarian idea might end up as a very, very socialist, communist way to run economy. So, as you see, I have not found the definite, the final conclusion, but I know that we have to search further, and that that all the arguments in favor of Bitcoin have not been very convincing. Maybe people argue, well, your arguments haven't been convincing either. Fine, but at least I try to apply common sense economics, textbook economics to Bitcoin, rather than hoping that it will end up as you wish. But that's probably the difficult thing about Bitcoin. It has some allure, and people like it because it's new, but maybe we're gonna be very, very disappointed. So we are in a phase of experimentation, and that's okay, and we know that we don't know, and that's fine, but we still have a lot to discuss and to find out, and that intellectual honesty will lead to the right solution, not sect-like arguments or killing Bitcoin slogans. I think the truth is somewhere in between, and I don't know where, but I know we have to search further and to accept that we might be wrong.
It's certainly a good idea to also criticize and then, develop arguments pro and con. Yeah. I think that's what I think is very important. I mean, you said before that you got quite a lot of criticism from Bitcoin.
Yeah, aficionados, yeah.
Exactly, from Bitcoin fans. So what exactly were the points where they criticized you?
That was the funny thing. They would not criticize my arguments. They would just criticize me personally as an idiot. I can't live with that. I had to get used to it first, but
usually with the accusation of, oh, you don't understand, you're old guard economist.
It's good. I like to be old guard. I still like the Beatles. So quality survives for a long term. So Bitcoin still needs to prove that it has the quality that good artists or good quality houses have. And so maybe I will change my mind. But the thing is that the discussion gets easily, on both sides, gets easily very personal and direct and not very factual. And yes, I've been a victim of that, but people criticize me for being against Bitcoin, but not against Bitcoin because I hate it, because I try to argue, try to find a way how to assess and value and Bitcoin. And if you say something that doesn't fit your belief system, then you will be criticized. Fine. I can live with that. There are enough Bitcoin fans that with whom you can argue decently.
Before you said maybe the discussion should shift away from how great Bitcoin is or cryptocurrencies are in general, more toward what they could be and what the real vision should or could be behind them. So where do you see that vision?
I think more of blockchain, because again the token is just the vehicle, like the voucher. I look at the technology and I try to think ways to make life easier, more efficient, safer, especially in healthcare. I see tremendous potential of blockchain technology to make sure that people will not buy fake medicine.
So what is then the application? I mean, provenance or...
Yeah, provenance or smart contracting. I think these are two very important and probably yet underestimated use cases for blockchain. You might have it in healthcare, not in finance. So we've tried to focus on finance. We eagerly and we stubbornly go our way towards finance, but maybe that's not the best use case in the first place. There are definitely other ones. I think healthcare is pharma is one of the biggest. Maybe you can also trade airline tickets easily. I think where you can make things more efficient, then fine. Direct, cut out the intermediary. That's always a good thing. Always has been a good thing. You've seen that with travel agencies. Nobody uses travel agencies anymore, but we still travel. And travel has become less expensive over time. So I think Bitcoin or blockchain, Bitcoin as a vehicle, but blockchain can exactly lead to that, make the world safer, more efficient, and therefore has a value.
And I'm sure that's another one that many people criticize you for, where you say you try to separate cryptocurrencies from the blockchain. Mm-hmm. So, but you're doing that. You say it's very much possible to use just blockchain technology without any cryptocurrency.
No, I'm saying the blockchain is the vehicle. It's like the voucher that moves certain values around. So the token, to use another word for Bitcoin, the token is very much linked to blockchain, but it's not blockchain that has a value. It's the service that it provides to someone. That's the point. Blockchain is more of an internet of value rather than the internet of information. And there I see value, but not as such. Blockchain as such does not have value again. Like the internet doesn't have value. You don't pay for the internet. You don't buy a subscription by Microsoft for a yearly usage of internet. You don't do that. You buy something from a telecom company that helps you to get on the internet.
Yes, because you can't. I mean, that's an argument that many people make, right, in favor of token economics, to say, well, yes, on the internet it wasn't possible because there was not this technology available where you could actually monetize these tokens. But now we have tokens that can be used with blockchain technology.
Well, you just called it differently, like an e-paper. It's a token. It's just called differently. It's just a vehicle. It could be a wood plate written Adriano owes $10 to whoever. It could be on a wooden piece of wood. It could be on glass. It could be on paper. It could be on a digitized on a coin token. So I think we should go back to economics. What do? We sell an e-paper. We sell information over the internet rather through the kiosk on a printed form. No, both is a token. the paper, having the information, the token, having the internet, having the information. You should think more, what is it? And for me, it's a carrier, nothing else. And once people understand that, then you say, okay, how can I now create value using that token? What could be the information or the asset that I move from me to you? So that people should understand that it's not the token. Token is irrelevant. It's a voucher, a digitized one. I don't understand why people have so much difficulties to get that. It's moving nothing between the two of us doesn't create any value. We can move bitcoins forth and back. We can create the Stackers token on Ethereum. We can create today 1 million. You send 500,000 to me. Now I have half of the circulation. So do you think somebody is going to pay $1,000 for that? No. Why? Because it has no value. But if we say, hey, the 1 million ETH or Stackers token that we created, these are linked to my salary, then it gets value. But it's the salary that carries its value, not the token. That's why I created once with a friend of mine the Colana token on Ethereum, 1 million, and just to show people how ridiculous it is, because I still try to find someone who pays me $1 million US for the million Colana tokens. I haven't found anyone. Why? Because people realize, hey, there's nothing behind. It's fiat. It's like dollars.
What did you do with that project? Was it more like a private experiment?
It's a private ICO, just creation of 1 million Colana tokens. You can find it. It's lying idly there. But that was an experiment with people, because I would ask students, are you going to pay me $1,000 for that? No, professor, you're crazy. Yeah, great, A+. They understood that there's no value. Why should I give you $1,000 for what? So that goes to show that the token gets value only if it is linked to a real asset. And the Ethereum tokenization thing helps you. And people who do not understand can get fooled very easily. And I tried to show them, just out of it was an experiment, but I think very an impactful one, because people understood, hey, Adriano's fooling me. There's no value there, not worth nothing. I can't buy anything with that. Yes, you got the message now. It only gets value if you link it to something.
Did you look into stable coins?
No.
Because that's exactly that. They're linked to a basket of currencies or commodities.
Yeah, you can, but I was looking more into real estate tokens. I think that is quite fascinating, because real estate is very difficult to sell. Some notaries, all kind of people who get money out of it, providing no value, actually, just by signing something. I think that's what I like. We have a problem there with some legal issues, because some foreigners might not be able to buy property in some areas, or in Switzerland, for example. It's not so easy. So you have to take care of that as well if you tokenize a building, because once it's out, you don't know who owns it. It might be a billionaire in Russia, it might be an Italian, it might be the Swiss around the globe. You simply don't know it anymore. So there are certain risks to that. But I like tokens as such. I mean, yeah, if you call it stable tokens, I call it real asset tokens, or derivatives of something.
Adriano, you've also been a wealth manager in traditional finance at UBS in Switzerland. And do you often discuss these topics of cryptocurrencies, of Bitcoin, crypto assets, blockchain technology with your peers from traditional finance?
We discuss it, but not at great lengths. We talk about it, you have to take it seriously because it's a fact. People want to trade it. People create certificates, structured products. People want to benefit from that hype, so it's fair enough. But that has nothing to do with the real worth or the whole idea of tokens and blockchain. And as a matter of fact, I think it's quite funny that the technology that prides itself of cutting out an intermediary in the end needs an intermediary to be exchanged. And that's quite funny to me. That's a paradox which doesn't make sense to me. It's illogical. So if people say, hey, a traditional bank like UBS or Goldman Sachs for whoever is starting with Bitcoin trading and thinks now it got to prove the stamp of approval, it's just wrong. What these banks want to do is make a profit by the difference of sell bid and ask spread. So the difference which you would have to pay and what you would get, and where the price is not of interest. They just want to get that margin. And so they could as well create an Apple or Orange desk at Goldman Sachs, might be equally profitable. But that goes to show how ridiculous that is. I think a technology that wants to cut out an intermediary, in the end needs an intermediary, then something is definitely wrong. So I don't believe in the sustainability of such trading desks. They're gonna be out of business as fast as they popped up. So don't hold your breath. Goldman Sachs, starting now, might as well stop it in 2 years from now. And I think they use it and they look at it as an experiment. And so, to me, it's not a stamp of approval at all.
Don't you think they'll move into offering Bitcoin accounts for customers at some point?
Yeah, could be, but it's fine. You might as well offer a safe for watches or, I don't know, a barrel for your oil. It's just a store. You need to put it somewhere when you buy it. They offer it to you. It's going to be an account. But if they don't make enough money, they will force you to move out. They will give you a check or whatever. So I think that's not the future. That's definitely not the future. If it's all about trading desks at traditional investment banks, then Bitcoin is gonna be doomed, definitely. So it's actually a bad sign to me rather than a good.
Okay, why?
Because they don't care about Bitcoin. They just want to take out their margin, and
that means basically they'll increase the volatility of the asset.
They might as well lower volatility because they add liquidity to the system. I wouldn't devalue that, belittle that. I certainly could see some value for that, but it's not that. It's all about trading. It's not about the idea of having a stable monetary system or to have a limited supply asset base. It's only about making money by selling, buy and sell. And again, that's quite ridiculous to look at it, because the whole idea of blockchain is to get rid of that. So I simply don't get it. I can't take that seriously. It's just to increase their bonus at the end of the year and let them be happy. Fine. I certainly will never ever open a Bitcoin account with Goldman Sachs. If then I would have my wallet app on my iPhone, but surely not with Goldman Sachs. So it's to me it's not a good sign actually. It's a fad, and it will disappear, and rightfully so.
Well, maybe it's just experiments. I mean, you said it yourself. It's a big experiment. The whole cryptocurrency space. Bitcoin was the first, and maybe they look at it in a similar way. Where do you think all of that is going? Once people have experimented for a while, what will happen then?
I think it will be quite traditional. You will have probably exchanges, but they cost nothing, so it's automatic. Between various assets, you tokenize real assets, and then you start to exchange it. You can actually increase volume. You can make markets deeper and less prone to crises. You allow investors to get access to a certain asset at a much lower price. You don't have to cough up 10,000 or 20,000 bucks to buy a share. You can get into it at 5 cents. I think these are tremendous advances. I also see financial inclusion as a big topic. When you see that probably half of the population do not have a bank account, do not have a credit card, do not even know what credit is or what money is. So education coupled with smart blockchain technology can actually increase their lives, improve their lives. But it's not going to be the trading desk at Goldman Sachs that's going to make any difference to the poor people in the developing world. I think there are better uses for that technology than to be traded by an old-style investment bank. That's my point.
Mm-hmm. When you've been in finance for a very long time. Yeah. What made you, or what was your motivation to get into finance in the first place?
Main motivation was that finance is at the center of economics. It funds good projects. It improves lives. It moves money from where it's not being used right now to people who want to invest and spend it now. I think it was like the idea being at the very center. But what is also true is that I think that finance can, as I always say, should improve the lives of people. If it doesn't, then forget it. I think it's not just there because it's there. It has a function, and we should rethink that. We should redefine the role. Blockchain technology can be an answer to that, and I think it can, and it will. Without Bitcoin, doesn't matter. But if it doesn't add quality to our daily life, then finance has no role. And that is nice because you can have an immediate impact if you do it rightly. That fascinates me. Still, I'm so glad to be in finance. I think it's one of the most fascinating jobs.
Were there any examples recently where you saw that something you did in your function in finance helped somebody else?
Yeah, it's daily we do that. They come to us. First of all, with our robo advisors, we democratize wealth management. What used to be a domain for the very rich, super rich, has now been open to the less privileged, so people can get access to good asset management at a very low entry level. So they can also benefit from all that know-how of investment, know-how of that new knowledge and technology. But also if people want to buy a house, it's great pleasure to find the right solution, the right credit, the right mortgage, that they can pay back. It's easy, as you saw in America before the crisis. It's easy to give out loans. If you don't care about what happens to them, you can sell it, get the quick buck and walk away. But that's not the point. You want to make sure that the family can stay in the house. And it's natural that the family eventually wants to have a house. It's fine. And if we can help them to get that sustainable solution, it's a pleasure. It's nice. Yes, it sounds strange, but it's nice. I like that. And I'd rather see families in the house rather than in Miami out of abandoned housing. That makes me sad. The movie Big Short was kind of a shock, and you saw that in Florida. That's not what finance is all about. And technology and blockchain can make it even more efficient, the delivery of financial services or insurances to the people. So I'm quite excited that these technologies will actually make it even more exciting for us in the financial sector to serve our clients.
What keeps you up at night?
My soccer team losing all the time. It's not that much. I actually well, it's not that I can't sleep. It's would be sad because then I cannot serve and work diligently, so I'm too tired. No, I certainly what bothers me is the way we do finance today. I hoped that we would make the system better and more stable, but I think we already planted the seed of the next crisis, which will be equally devastating like the last one. That potentially bothers me, and I think we should rather soon find a way. As I said at the beginning, I hope that blockchain or Bitcoin could be that solution, but maybe I had too high hopes for that. Maybe that was unfair, but I'm still looking for a way to make the system more stable. That's a concern, but doesn't keep me awake at night. Not yet.
As an entrepreneur, do you have role models?
Well, it's difficult. I think you have to find your own. You have certain people you respect for what they've done, and I have great respect for people who have high ethics in finance. That's not very widespread, but I think people who entrepreneurs and wealth managers, the old style private bankers, that's what I kind of like. I respect for what they've done. I think I have great respect for the late Steve Jobs, who always came back and he stuck to his dreams and goals and delivered the way nobody would have expected. He created a new industry. So that I have great respect for people in the social area who nobody knows. Those in underprivileged areas who help them at a very low salary. I have great respect for those people who really nobody knows, but you see them, you witness that. I have the kind of people who try to make the world better at any price, and are not thinking only of the next holiday trip or the car or the next watch. I luxury watch, of course. I like those people. I have great respect.
Cool. Did I forget to ask anything?
No, you covered pretty much everything. I think it's okay. I might, at the beginning, I might have been too negative or sounded too negative on the new technology. I just try to apply logic to the theme of cryptocurrencies or crypto assets or crypto whatever, tokens, you name it, that we should not forget our common sense and to accept the fact that maybe it's not worth it, or that it was a nice try but it didn't fly. We should not be afraid of disaster, so to speak, because we will have learned a great deal, but it will not make it better if we shout down people who have a critical attitude or a less optimistic attitude towards cryptocurrencies. And then I think we're on the right track. That's probably my main message. Let's not be confrontational. Let's try a way that helps each other to understand this animal better, and to see if we, by doing so, find ways that we have not known yet or seen yet to improve finance. That's the whole point. Again, if blockchain is not gonna help the people, it has no use. If trading of apples at Goldman Sachs does not improve the lives of the people, it has no use. That's true for apples, that's true for bitcoins, that's true for blockchain, that's true for everything. That's the key question. Does it add value to people, and does it improve the lives of the people? If your answer is yes, congratulations, we have a good tool, we have a good technology. Sustainable technology. If the answer is I don't know, think twice. If the answer is no, forget it. Move on. Look for the real. That's the key question. Even for blockchain.
Thank you very much, Adriano, for taking time today.
Yeah, no problem. Thank you, Arno.
Thanks so much for joining us today. More info on our guests and our sponsors is in the show notes of this episode and on the podcast website, theblockchainandus.com. To help people find this podcast, it's important that you download, subscribe, and give it a top rating and review on iTunes or on the podcast platform of your choice. I'm Manuel Staggers, and I thank you very much for listening.